In the Push and Profit private group this morning, I called out a trade idea for Meta saying I'm possibly looking to go long and get 295 calls once Meta is below $286.35 for a scalp, and that trade idea was absolutely fire. In fact, if you would have taken that trade idea, you would have been up over 400% with that one trade alone for the day. Now, that trade idea was mostly based off the bullish activity in the options flow, but as well with the catalyst event of the new app that Meta is rolling out, which if you guys haven't heard, it's called Threads, and it is releasing on July 6th, which is basically going to be a competitor for Twitter, but it's going to be under the Meta platform. Along with that, we also closed a little bit higher with the S&P 500. However, if we take a look right over here, right at exactly 2 p.m., we saw a massive dive down in the overall market for the S&P 500. And this is simply because what I mentioned in yesterday's video, which was the FOMC meeting minutes that came out exactly at 2 p.m. And these meeting minutes that came out kind of gave us a little bit more of a deeper look into what exactly the FOMC is thinking. For example, nearly all Fed officials expect additional rate increases this year, and many of them also believe that a recession still remains very likely, though it's possible the starting point has just been kicked back. But along with the Fed meeting minutes, we also had New York Fed President Williams speak at 4 p.m. after the market closed, and of course we heard more of a hawkish tone from Fed Williams, saying that we have more work to do. However, today, although we had a lot of hawkish sentiment and we obviously know a little bit more of where monetary policy is heading, we still had an overall green day. And in fact, if we take a look at Tesla, it almost looks like the bull run is still here to keep going. In fact, if you even look at Tesla from a 5-minute view today, we see that, yeah, we kind of did dip down with the overall market at around 2 p.m. when this news came out with the Fed meeting minutes. However, right afterwards, Tesla stock kind of just rebounded like nothing happened. And even after the market closed, we see that at the end, yeah, it was a little bit bearish, but it seems like things are picking back up even afterwards. Now I'm gonna go ahead and further discuss the price action for Tesla and also talk about, the possibility of a short squeeze coming for Tesla. However, before we do that, I do kind of just want to revert back into, talking about, the catalyst events and talking about monetary policy. For example, in yesterday's video, I mentioned that we have a short but busy week for the markets because, of course, tomorrow we have a lot of job data coming out with the ADP employment report, initial jobless claims, the JOLTS report, which is the job openings. Of course, we want to pay attention to all that. But then, of course, on Friday, we even have more employment data coming out with the unemployment rate coming out. And then, of course, the U.S. hourly wages and then hourly wages year over year. So overall, a busy week going forward. And so although we had the markets having a half day on Monday and then being closed on Tuesday for July 4th, there's a lot going on, right? There's a lot of, catalyst events that are going to be moving the markets. And so we want to pay attention to this. Now, I'm expecting that we're probably going to have a little bit of a red close this week simply because, and of course we have to be data dependent, right? Because obviously everything can change depending on how the data comes out. But if we have strong employment, although typically that's good, we want to see the economy, have strong employment data. We want to see Americans working so that they could have their paychecks, so that they could go out and possibly buy Teslas, right? But right after, the Fed meeting minutes and then also having the New York Fed President Williams speak saying, hey, the data that's going to be coming out is really going to tell us where we need to go going forward. Well, if we have strong employment data, well, that's something that's been really stubborn for the Feds to actually fight, right? Because we've had a robust job market and, the Fed, although it is kind of part of their dual mandate to have maximum employment, they kind of need things to stifle down just a little bit, right? To cool off inflation. And so if we have good job data coming out, we may see this like weird situation where although that's good, the markets may start to panic because then the markets might be like, oh snap, we may have to have, the Fed's hike by maybe 75 basis points or 50 basis points going forward, which of course we know that the Fed's hiking is not good. And so with strong job data, we're going to see the Fed's hiking like as if they were playing football. And so when we take a look at Tesla stock from a weekly view, one of the notable things that we have to pay attention to is where we're currently at relative to the volume profile. See, if we just continue going up just just a little bit further, that pushes us up to this new territory where there's very little volume by price. And if the uptrend is going up when there's little volume by price, well, that's where we could see the massive spike going upwards. And so one of the things I said in the past on this channel is that Tesla is one of the most shorted mega caps out there with a short float ratio of 3.5%. Now, honestly speaking, 3.5% isn't really enough to cause a short squeeze just yet. I mean, there isn't any rules or guidelines saying what specific percentage it is. However, typically we don't see short squeezes happening until we reach until 10%. However, we may not be too far from there, especially if Tesla keeps going up. And so we could possibly get closer if we see Tesla stock continue going up once we go above that area where there's very little volume to price, and as we get closer to earnings. And so what we could possibly see is, a lot of short sellers kind of speculate on Tesla thinking that they're going to have a bad earnings while increasing their shorts. And then of course, if Tesla has a good earnings and they spike up, remember when Tesla had the good delivery numbers and they spiked up by 6% the next trading session? Well, the same thing could happen if they have good earnings, right? And it beats Wall Street's expectations. Well, short sellers may increase their bets right before then and then end up being wrong. And that could then trickle us into an area where a short squeeze for Tesla is actually very possible, and we could see Tesla stock go even further up higher. Now, one of the things that investors are going to be paying attention to when it comes to the earnings for Tesla, which is coming out at around, July 19th, which is, really just right around the corner. But one of the things that, investors are going to be paying attention to is two things, right? Free cash flow, and then of course, profit margin. See, one of the arguments here is that, hey, Tesla has been able to deliver a ton of vehicles, but that's because they had to diminish their profit margins by, cutting their vehicles and making it more attractive for individuals to go out and buy it. And so that's really the bear case that they've been saying that, hey, we're probably going to see a bad earnings for Tesla. However, we still have the possibility of seeing Tesla still uphold a pretty decent profit margin by not declining by too much, right? Because of course, if profit margins go down to 5%, right, which I don't think that's going to happen, but if it did, well, then that would be bad, right? Of course, all the bears would come out from, their closets after they've been dying and finally have a aha moment. However, I don't think that's going to happen. Of course, we just can't rule that out. But if it does, we could see Tesla stock kind of stifle and start coming down a bit. But if we have Tesla stock kind of stay moderately where it's at in terms of the profit margins, well, that could really just make the bears once again go away, right? Go into the shadows or wherever they end up going when they're losing, right? And start crying. And so, that could possibly cause Tesla stock, like I said, to go up and then possibly start the beginning of that short squeeze. However, at the end of the day, we have to stay data dependent and pay attention to all the catalyst news and all the data that's going to be coming to us within the next couple of days and of course couple of weeks. However, with that said, I want to go ahead and cover Tesla from two different perspectives. One from the perspective of a short-term trader, and then two from the perspective of a long-term investor, right? Because of course, I invest in Tesla in the long term in my long-term portfolio, but I have a separate trading account where I trade Tesla in the short term. I say this in pretty much all my videos just so I don't get people confused, because at the end of the day, trading and investing are two completely separate vehicles. You don't want to mix that up, right? I think that's where everyone kind of gets confused and everyone starts arguing, right? So, starting from the perspective of a short-term trader, one of the things that I've said a multitude of different times on the channel is that I still don't see any opportunities to really short Tesla. I honestly don't even want to short Tesla with a 10-foot pole, simply because I think it's too risky, right? The risk to reward there is just not good for me. And so I honestly, I'm still long, even in my short-term trading account for Tesla. I'm probably going to be trading more shares or trading more calls, especially as we get further closer into these new areas, right? And so that's just my approach from my short-term trading account. But again, from the perspective of someone who's investing long-term in Tesla, well, there's a couple of ways that you could look into this, right? So, you could look at this as, an opportunity to just really sit on the sidelines and kind of just wait for Tesla to either come down and maybe buy some more, or maybe you're just going to continue dollar cost averaging. However, it's really in terms of how you invest long-term and what you think is going to happen, because there's one approach saying, well, hey, if the Federal Reserve believes that we're probably going to head into a recession, it's just later down the road, well, I don't know if you're a long-term investor that maybe you may want to start buying more now, as you know things may start coming down in the future, and you may want to just continue dollar cost averaging. And then once we get into 2025, once the cycle starts all over again, because everything's cyclical, right, and we start getting into quantitative easing again, right, well then you're already buying Tesla at all these low levels, so you'll be set. Or you may have the approach that, hey, I'll just wait till Tesla comes down, and then I'll go ahead and buy more. Now, for me, I'm honestly just waiting on the sidelines for Tesla. Like I've been saying, I've been waiting for a while for a buying opportunity for Tesla, and it just seems like the buying opportunity for me is just not there, right? Of course, I could just keep dollar cost averaging equally every single month, but I like to just, do it in a lump sum. But again, economists and investors, they debate on which one's better. There's, just arguments on what you should do. But me personally, I like to, follow the Warren Buffett quote that, you want to be greedy when everyone's fearful, and be fearful when everyone's greedy. And right now, with Tesla up at these high levels, I honestly don't even want to invest long-term more until we see Tesla kind of start softening a bit, right? So I'm really just enjoying the benefits of seeing my long-term portfolio go up because of Tesla, right? So that's just my approach. Now, honestly, as I say in every video, you shouldn't just, trade or invest based on anyone else's opinion. And you should always do your due diligence. You should never just copy what anyone says, because at the end of the day, you should be responsible for your own capital. But at the end of the day, there's a lot going on. And of course, the only thing that we could do is really stay data dependent and obviously stay up to date and stay informed into seeing what's currently going on in the overall markets. Now, with that being said, if you guys want to be able to be a part of the Push and Profit private group, where you guys have access to my daily trade ideas and where I talk about what's currently going on in the market in more details, make sure to check out the first link in the description of this video, because that's going to be a link where you have access to join the Push and Profit private group, and you get all the other benefits of joining the program. So definitely check that out. But with that being said, guys, you guys let me know in the comment section what your thoughts are on Tesla, both in the short term and in the long term. And before you guys go, make sure to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.